If a trade doesn't go your way, you will lose more. If a trade doesn't go your way, it's not just you losing more money, but in the same way, you will be paying off interest. One of the biggest things that hinder people from investing in stocks is that they have debt to pay. So before you invest in the stock market, no, before you go off and go into mutual funds or go into any other form of investment, is you need to pay off your debts first. It's very, very, very important. And you have to know this. People ask me, Marvin, is it okay to go and borrow money and put it in the stock market? I'll never recommend that. You can make money off of it if you make a good trade, but what if the opposite will happen? And your goal here is to remove as much variable sana as possible. And the more you expose yourself to greater risk, should you make mistakes, should things don't go your way, you will lose more money that way. And the way for you to be able to win and make money off of it is to just to control and put yourself in a position where even if you make a mistake, the biggest loss that you could possibly get is just a paper loss, or you cut your losses early that you get a smaller amount of loss. Because here's the thing, if you borrow money and the trade doesn't go your way, you not only get a paper loss or you actualize your loss and sell, but in the same way, here's what's gonna happen. You're still paying off that debt. And I've seen many people who would do it, and they do it because they're after the possibility that if it is a right trade, they actually make more money.
Opened it back up about
Oh,
9 months to a year. Papa Mom. Nilay in it?
hey guys.
Hey! That's okay.
So what's gonna happen? Number one, if a trade doesn't go your way, you will lose more. If a trade doesn't go your way, it's not just you losing more money, but in the same way, you will be paying off interest. And I've seen a lot of people lose money that way because they would do it because they think that if they put more money, it goes the right direction, they make more, they will earn more. But you have to understand, if you don't have the money to be able to fulfill that position, don't borrow money for it, because it actually means that you might not be ready for it. Also, you might not. It's not just about the funds that you have. It's also to always go back to the skill set that you put in it. That why are you looking? We're talking about
You
borrowing
will
money
find that
for.
later when
Bar-
you edit.
why? Because you were in the back the whole time.
Yeah,
Okay, you have to contribute. What's your comment to people who are borrowing money to invest?
that's not good.
Why?
Because
Because
you're not supposed to borrow money to invest.
why is your voice getting weak? Kanina excited ka ngayon. Hindi na boses mo. Ha?
Because
Because?
you're paying more interest.
Oh. But what if
You're
what if it goes, what if sayang naman, what if they only have 20,000, they can borrow 200,000 and then they can invest at 200,000.
Yeah, but
If the
that's
20,000 earning 10%, the 20,000 earning 10% will give them only 2,000, but if they make a good trade 200,000, then it earns 10%, it will be a larger amount of money for them already.
But it also can go the other way.
Kaya nga, so that's what I've been saying. If it doesn't work your way, you will lose even more. And then the fact that the money's not there, it means that you're probably not prepared for it also. The skill's not there. So don't rush it. The way for you to be able to take advantage of the stock market is to do it gradually. Do not rush it. Do not borrow if you cannot take it yet. And the thing about that is, you have to, when you start putting larger amounts of money, it has to be proportional also to the risk that you're willing to take. It, for people who have larger amounts of money, the thing about that is when their portfolio is bigger, they can take larger risks because they have a certain amount of cash also stored. Aside from them having a level of cash stored there, is that even if it goes the wrong direction, they can cut losses because they have other investments and they have cash stored as well. And it's a I guess it's one of the worst scenarios for you to be in if you borrow money and you put that for investing. The best way for you to do it is to save your money first. Savers are winners because savers, the money that you've saved is something that you can use to propel you that you can invest later on. Savings are options. Your saving is something that can help you later on. That as you start saving that money, when opportunities to invest come your way, that's what you can use, that you don't even have to borrow. Teka, nakakapansin ako, inubos mo na yung kape ko. Kape ko yan. Pinahawak ko lang sa'yo. Pinahawak ko lang sa'yo yung kape ko. Nakakapansin ako naka-record dito, naka 5 sips ka na. Maubos yung kape ko. So, alam mo mas masama sa utang? Yung nagnanakaw ng hindi sa kanya. Oo. So, anyways, I'll wrap this up na para we're done and we can drive. Number 1, never ever borrow to put it to an investment, especially for the stock market. It's different if you're putting it in real estate because the fluctuations of real estate investments aren't as big and aren't as volatile as the markets. You can easily get it rented out or you can have it sold later on. In the stock market, you can't guarantee something. You can't get a specific amount that you can fix and peg later on. There are people who can do it, but for 99% or 95% of the population, it's a very, very risky deal. So the only time that you borrow money is if it's real estate, and then probably the rental income can take care of the amortization. That's one. Or if you're buying a house, it's more reasonable for you to buy the house and then amortize it than pay rent, and you've done the math, it's almost the same level. That's a good analogy to it. And number 3 is, if you have a business and the business is a good track record already, it's already earning, it's already expanding, you build wealth on top of wealth. If you're starting your business pa lang and then no track record, no earnings, no history, no narrative yet of how you can make it earn, don't borrow money for it. Always start small. That's why I keep telling people, if you are borrowing because you want to do it big quickly, that's the wrong notion. And there are people who are successful that way, but for majority of the population, it's a very, 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 very risky move. And my suggestion to all of you, if you want to invest in the stock market, that's why the stock market, the board lots are so small, because you can do it early, you can do it easily, and you can do it at a very, very small amount. But you don't have to spend a lot of money to be able to invest in the stock market, so why borrow? Better build your portfolio by adding every time, selling stuff you don't need, and put it into the stock market. And number 3, as your trades get better, never take out money. You will always lose every time you take out money in the market and use it for stuff that you don't need. So if you want your portfolio to grow, never borrow. Build your portfolio via making good trades. Build your portfolio by adding as much as you can. Build your portfolio by selling stuff that you don't need, and that's how you do it. Do it over and over and over until it becomes such a big amount that it can take care of your daily expenses. So that's it for now. Marvin Germo. What do you call the falls again? Okay, closing words for people. Gotta visit na about stocks, about borrowing money for investing in the stock market.
Only borrow when you know you can pay it back.
Okay, what if you borrow from your wife?
Then you always have to pay it.
You also have to pay it back? Okay, so that's it for now. I hope this video helps you trade well, trade strong, trade smart.
And with
From
interest too.
Mulmota Falls with interest too. See you all again soon, guys, and God bless you, but never borrow.